Okay, now all eyes are on the next meeting by the empowered group of ministers, that's the EGOM, on the 27th of July, which will decide on the allocation of gas from the KG basin. But of course, controversies are already brewing, with Reliance Industries now seeking gas for itself among other customers. Ruchita Saxena as well as Ajay Sharma join us for more on that story. Ruchita, to you first. Of course, we do have access to the letter that RIL has written to the Oil Ministry. What's at stake in this next EGOM meeting then?
Yes, through the letters that are written by Reliance Industries to the Oil Ministry and the chairman of EGOM, that's Finance Minister Pranab Mukherjee, Reliance Industries is basically building a very strong case for allocation of gas from KG Basin for its own captive use. And it is saying that as a producer of gas, it should get some priority from for the allocation of gas from KG Basin because so far it has been seeking gas for its refineries and petrochemicals as well as captive power plants, but it hasn't got any. Over and above that, there has been some lapses in terms of utilization of gas that was allocated by EGOM in its last meeting. There are these 16 customers, which includes companies like ONGC, SR and NTPC, which were not ready to accept this gas in November, and Reliance is saying that is why it is now not able to supply gas to these companies. So that lapsed quantity of 2.2 MMSCMD should also be considered while this gas is being allocated. But most importantly, it now wants the other gas producers also to be considered under the gas utilization policy.
Okay, Ruchita, let me go across to Ajay now. Ajay, what would it mean for the balance sheet of RIL now that they're saying that we do want to use it for captive purposes and not really give out the gas to third parties? In terms of cost savings, are we looking at anything on that front?
Well, absolutely. That will be a definite trigger for the stock, which has been languishing around lesser than the 1100 mark. The letter clearly spells out that Reliance Industries has sought gas for their own use, which up till now they were using naphtha and other fuels which were costlier than if they are allowed to use gas for their own captive petrochemical and refineries and other uses. It would lead to a lot of cost savings as far as production of these products are concerned. Analysts even put a number of over 10,000 crore spread out over a period of time, accruing solely if it is allowed to start using their own gas for captive use. One also needs to take into account that on the other fundamental front, petrochemical margins are almost trading flat. For this quarter, expected earnings also. GRMs, refining margins are not going anywhere. Their production from KG6 is flat around 60 SCMD. So any development on being allowed to use or being seen as a priority user, being the main operator of that block, will definitely provide a very key fillip if potential this development actually goes on. And that's why this will definitely have a big impact on the EGOM on 27th and will garner a lot of importance by the ministry.